False moves in the market are designed solely to trap the unwary speculator. They deplete capital quickly and erode essential confidence. Understanding how to filter these traps provides you with an insurmountable advantage. This skill separates the true professional from the temporary gambler. The methods taught by Wyckoff allow you to look inside the composite operator's mind. They provide a structural framework for identifying preparations for major moves. You must understand the difference between professional positioning and simple market noise. This critical distinction guides all your trading decisions. We are concerned only with confirming whether price action is genuine or merely a diversion. Legitimate moves always leave behind specific, quantifiable evidence. You must develop the discipline to wait for this proof to materialize on the chart. Never trust a breakout until it has successfully proven its integrity. Before we continue, please take a moment to subscribe and leave a quick comment, even just a single word. This simple action greatly helps the algorithm recommend this video to more people and shows me that this kind of content truly matters and is worth creating. And please do not forget to return to the channel during challenging times when trading becomes difficult and your confidence starts to waver. Market movements are ultimately governed by either strong professional hands or weak amateur sentiment. Price stability suggests absorption by those planning large campaigns. Volatility often signals panic among those without sufficient capital or conviction. Your analysis must always seek to determine the side dominating the transaction flow. Professionals rarely commit their massive campaigns without first ensuring the path is clear of opposition. They use specific market actions to check for remaining supply or demand resistance. These checking actions, or tests, are precisely what you need to recognize and capitalize upon. This preparatory phase offers the greatest opportunity for precise entry. Many speculators are eager to chase the first sight of a price surge above resistance. When this breakout occurs on light volume, it often signifies a lure designed to trap inexperienced buyers. Lack of follow-through volume means there is no professional force backing the move. You should avoid these price spikes with unwavering caution. When a stock attempts to move before sufficient supply has been cleared, the reaction is brutal. The remaining sellers immediately overwhelm the tentative demand, driving prices back down sharply. This creates devastating losses for those who fail to confirm the structural test. You must understand that effort without result precedes failure. The inexperienced trader buys based on excitement and the fear of missing out. The astute operator understands that waiting for confirmation drastically reduces speculative risk. You must train yourself to view confirmed tests as the only legitimate entry signals. Patience is not a virtue in trading. It is a mechanical necessity for survival. Before you allocate substantial resources to any position, the market must provide its final sign-off. This final test ensures that the structural foundations are sound and ready for expansion. Without this proof, your position remains a mere speculative gamble. You should treat the test as the official permission slip granted by the market itself. True market strength is demonstrated when supply attempts to assert itself but fails entirely. Conversely, true weakness is shown when demand tries to rally prices but finds no supporting volume. These failures to achieve the desired result at critical junctures are the structural proof you require. Look for the market to fail its own attempt at reversal. After a significant initial thrust away from a structural consolidation, the market rarely proceeds directly. It almost always pulls back to the area of the previous breakout level. This pullback is necessary to ensure the structural change of hands is complete. You must anticipate this natural reaction as a high-probability entry setup. The professional interests need assurance that all weak hands have been shaken out. They are checking to see if significant selling remains lurking below the surface. If supply is still present, the price will likely retreat further or stall severely. This action is the purest form of market diagnostic analysis. When the price pulls back, the professional operators step in quietly to soak up any last-minute selling pressure. They are willing to buy at the structure edge because they foresee a major advance ahead. This careful absorption keeps the price from collapsing below the critical support zone. Observe the price action carefully during this critical period. The ideal testing phase is characterized by selling pressure that exerts little downward movement. The bars should become narrower, indicating that sellers are struggling to drive the price lower. Simultaneously, the transaction volume must decrease substantially. This specific signature confirms the successful clearing of supply. The price may approach the edge of the breakout structure, but it must hold firm. A test that successfully confirms strength will not breach the defined low of the accumulation range. This failure to penetrate support is the explicit signal that the market base is sound. You must define this absolute boundary before placing your order. Every successful campaign begins with a clear display of professional purchasing power. Look for a forceful movement away from the accumulation zone, typically occurring on high, expanding volume. This initial thrust or jump is the first indication of committed intent. Without this primary sign, there is nothing legitimate to test. After the initial surge, prices usually consolidate or react slightly, catching late entrants off guard. This reaction phase is critical for forcing out those who bought too early or too quickly. The market aims to create an ideal environment for the next major leg up. Do not fear this pullback. Anticipate it as your entry window. The most effective test occurs when the price returns precisely to the level where the accumulation structure was pierced. This specific zone now acts as critical support that must be defended fiercely. The closer the test is to the origin of the move, the more reliable the subsequent rally will be. Mark this exact price level carefully on your chart. Low volume during the pullback is the single most important indicator of a successful test. It signals that sellers are exhausted and have no interest in driving the price lower anymore. If volume spikes during the reaction, it implies significant supply remains. You must see clear evidence of disinterest from the selling side. The lack of transaction activity confirms that the majority of shares available have moved into strong hands. The only shares remaining are those held by long-term holders unwilling to sell cheaply. Therefore, any downward movement is temporary and lacks conviction. This volume signature is your primary confirmation cue. When the professional operators know the track ahead is unobstructed, they are prepared to advance the price. The absence of selling resistance means large orders can be executed efficiently without causing unnecessary price drops. This cleared pathway ensures the maximum velocity for the next phase of the rally. Do not fight the market once this condition is met. If the price drops substantially on narrow bars, but the general spread is wide during the test period, be skeptical. A wide downward spread implies some selling pressure still exists, even if volume is temporarily light. This suggests the absorption process might not yet be complete or that the initial strength was false. Demand structural integrity before committing capital. Analyze the specific bar that marks the low point of the test reaction. This bar should exhibit a clear struggle, perhaps showing heavy lower shadows, but must close well off its low. This action demonstrates that buyers immediately repelled selling attempts within that single session. You are looking for professional defense of the established level. If the test bar is narrow and manages to close strongly in the upper third of its range, it is an excellent sign. This confirms that the residual supply was quickly overcome by immediate returning demand. This closing behavior suggests that the test has concluded and the market is already turning back up. Prepare your orders upon citing this definite close. Once supply exhaustion is verified by the low volume and the successful defense of the critical support, the stage is set. The market has proven its internal strength and shaken off all immediate opposition. You now have the professional signal required to participate in the upcoming move. This is the moment when risk is minimized and reward potential is maximized. The market should not hesitate once the test is successfully completed and demand returns. Look for price bars to widen dramatically as strong buying enters the market aggressively. This rapid expansion confirms the conviction of the professional operators. Any delay or stalling after a successful test suggests a potential trap. The subsequent rally must be fueled by a clear and continuous increase in transaction volume. Rising volume validates the commitment of new, strong capital pushing prices higher. If the rally occurs on volume that remains light, the move will likely fail quickly. Volume must expand simultaneously with price spread. Strong demand must overwhelm any residual supply very promptly. Demand must be decisive, not tentative, indicating that professionals are urgent to acquire positions. Slow, labored upward movement suggests internal weakness even after a successful test. Speed of execution validates the entire preparatory structure. If the market struggles to lift off the tested support, the prior test was either weak or misinterpreted. A truly successful test leads to a rapid, dynamic advance that leaves doubt behind. The velocity of the move confirms the immediate readiness of the campaign. Trust the acceleration as the final piece of evidence. Be highly wary if prices rise but then stop advancing while transaction volume remains high. This usually indicates that professional selling is entering the market, overcoming existing demand. High volume without corresponding price progress signals a hidden struggle or effort without result. This scenario invalidates any immediate bullish position. When all structural elements align, low volume test, defensive support, followed by high volume expansion, the picture is complete. This alignment represents the market's definitive announcement that the trend has shifted upward structurally. You can proceed with confidence, knowing you are positioned alongside the strongest hands. This certainty is worth waiting for. The testing rules function identically when examining potential market tops and reversal points. Instead of testing for supply exhaustion, you are testing for the exhaustion of supportive demand. You must look for signs that buyers are unable or unwilling to support higher prices. Following an upthrust, which is a false breakout designed to lure buyers, professional short sellers take control. They allow the price to rally weakly back toward the high to determine if genuine demand remains. This reactionary rally serves as the demand test. If this weak rally stalls and fails to produce increasing volume, it confirms buyer exhaustion. Professionals recognize this lack of interest as a clear path to driving prices lower. This signature allows astute operators to execute short positions with high confidence. Just as low volume on a reaction down confirms strength, low volume on a rally up confirms fundamental weakness. It proves that the buying power necessary to sustain the move is absent. The absence of heavy demand means supply will soon overwhelm the market. Discipline requires that you use a strict, codified process before executing any trade of significance. This checklist ensures you have observed all necessary confirming evidence from the market itself. Never rely on guesswork or assumption. Rely only on concrete data. The initial move must demonstrate unmistakable professional effort and capital commitment. Low-volume initial breakouts are traps and should be ignored entirely. Always demand proof of powerful underlying force at the origin. A necessary retrace ensures the market has tested the commitment of the previous structural support or resistance. Moves that continue upward without testing often fail quickly afterward. The immediate return to the structural boundary is essential for confirmation. Exhaustion of opposition must be quantified by a distinct reduction in transaction activity. Compare the testing volume directly against the volume during the consolidation and breakout phases. If the volume is still active during the test, opposition remains problematic. The individual price bars during the test must show minimal penetration below the critical level. Narrow spreads demonstrate that selling effort yielded little downward price change. This effort versus result analysis is crucial for reading intent. This is the final structural defense line that must hold absolutely firm under pressure. Any deep penetration below the accumulation low or above the distribution high invalidates the entire structure. The test must respect the defined boundaries of the base. Following the test low, demand must return rapidly and overcome the high established by the testing bar. Quick movement demonstrates urgency and lack of remaining supply above that level. This rapid follow-through seals the confirmation process. Failure to satisfy even one of these criteria means the market has not fully proven its intentions. In such cases, you must stand aside and wait for a clearer opportunity to emerge. Never compromise your standards merely to participate in a market move. Your substantial capital must be guarded with rigorous discipline and stringent entry requirements. The primary function of these rules is to maximize probability and minimize exposure to uncertainty. Only place large bets when the market explicitly tells you the odds are in your favor. Rushing into a position before confirmation is the amateur's mistake. You must allow the professionals time to conduct their operations and reveal their completed intentions. Waiting for clarity costs you nothing and saves you everything. Pay close attention when the market briefly dips below a critical support line, only to reverse sharply and test the new low. This specific action, known as a spring, offers one of the highest probability entry points. The successful test of the spring confirms its legitimacy. When the market returns to the same structural support level and defends it repeatedly, its strength is undeniable. Each successful test increases the reliability and predicted magnitude of the subsequent move. Repeated tests demonstrate a deep commitment from professional operators. Price movements are only the visible effect. Volume is the invisible cause and the true measure of force. You must always read the relationship between price spread and volume to decipher market intent. Never prioritize price alone over the underlying transactional activity. Market patterns are merely approximations of structure, but the reaction at critical price points is definitive truth. Focus your analysis on how the market reacts when it encounters major support or resistance boundaries. Trust the evidence of struggle and failure, not just the shape of the chart. Wait until the market has played its cards and you have seen the final proof of its intentions. Speculation based on assumption is gambling. Trading based on confirmed tests is professional execution. Discipline yourself to only participate in clear, unambiguous scenarios. Understanding these testing rules provides you with a robust framework for interpreting professional market intent. Mastering breakout confirmation allows you to participate in major trends safely and early. Through this mastery, you gain command over the market's true behavior. If you are serious about mastering these methods and truly understanding the professional's perspective, the foundation is the original work itself. Richard Wyckoff's classic book, How I Trade and Invest in Stocks and Bonds, is a foundational text that offers direct, unfiltered insight into his proven, time-tested approach to market operations. It explains how disciplined professionals plan their campaigns, manage risk, and make informed decisions based on careful study of market action and the behavior of leading interests. It remains a critical resource for anyone seeking to internalize the principles of supply and demand and to develop the mindset of a true market operator. You can find the link to this essential book in the description below.